Hi, this is Steve Bray with today's Lone Star Lending Starbits rate update. We were hoping last week's inflation report would keep a lid on interest rates. Unfortunately, that lid didn't hold, and we're looking at the highest mortgage rates in about 5 years. Granted, rates still are historically low, but for some folks, rates in the fours are now in the rearview mirror. So what's going on? We're looking at a variety of factors. Even though last week's inflation report was tame, inflation still is elevated compared to last year and supports the idea of additional Fed rate hikes. The Fed will again reduce its bond buying on October 1st as part of its effort to shrink its balance sheet. Economic activity and consumer confidence have reached short-term highs, and a healthy economy tends to put pressure on rates. Wages finally seem to be rising, and rising wages typically filter through to higher consumer inflation and higher economic growth. Government borrowing to fund deficit spending means a greater supply of bonds as the Fed is tapering its demand. Against this backdrop, we've had a series of mini crises this year that have kept investors on edge. Trade fears probably have been the most pervasive, but even the fear of a trade war seems to be dissipating. The apocalyptic predictions didn't pan out, and investors seem to be viewing the posturing as negotiating tactics rather than a real threat to the global economy. Other threats still exist, and I think those will keep rates from rising too much too fast. However, for now, if rates take a temporary dip, it probably makes sense to lock. That's Starbits for today. Please comment below and follow us daily on our Texas Lone Star Lending website.